Welcome to this afternoon's discussion. If the trust is in the network, what is the point of you? You, Y-O-U. Why and how and potentially should you exist in this network? In part, we've been talking about decentralized technology and how that fundamentally shifts our business models, where we create value, and it calls into question the role that we can play in this potential new decentralized future. And this has been building up from this morning. We've talked a little about that future state of what we should be paying attention to, what are the technologies that are transformative to our industry. And we follow that up with a conversation around blockchain, but blockchain in the context of how do we fix this digital world that was created 20 years ago when the Internet 1.0 was established. There's an essential component of that that is actually missing, which is the identity protocol, a common protocol that allows us to actually map back those transactions, those footprints, and all of that data to a single individual. Some of the regulations now that we're dealing with in terms of GDPR actually put that ownership back into the hands of the individual. But how do we do that when we've had such a centralized system to organize all of this data around identity? Allow me to introduce or have our panelists actually give you a brief synopsis of who they are and what role they play within the industry. Anne-Marie, would you like to kick us off, please?
I've been with ING for over 20 years, and actually I've always been dealing with clients. So I also should represent the way we deal with clients in the innovation things. For ING, innovation towards clients is really important rather than just to help our bank. So that's my role.
Joseph.
I have a background in mostly technology, but also finance. I became aware of the blockchain space very early. I was one of the founders of a project called Ethereum.
Stephen, give us a perspective of who you are inside of the network.
Welcome. My name is Steve Gilderdale. I'm the Chief Platform Officer at Swift. Swift has always been a platform, both a business platform and a technical platform. We bring service providers together with consumers, and those service providers can be banks, they can be market infrastructure, and the consumers can be corporates, they can be other banks. And I would say as well that, you know, with some capabilities that we have brought in terms of identity, security, etc., I hope do mean today that there is some trust in the network, at least the physical network that exists around Swift.
Valerie, give us your role and your perspective as more of the central bank, the central organization.
VTB Group is the second largest banking group in Russia. We have more than 14 million clients, individuals, and 500,000 corporate clients.
And Anne-Marie, you do a lot of the discovery on the early blockchain projects at ING. Is this really a technology that is going to fundamentally ask us to change the way we radically do business? Or is it maybe more of still an sort of actor that's a little bit early for adoption?
We believe that this technology really has the potential to be radically changing the way we do business and really add a lot of new value for clients. So we are running a couple of pilots. We've been running a couple of pilots last year, and there's a couple of areas where it's quite logical to change stuff. So where we see a lot of traction at the moment is in trade finance, and Joe's actually working on one of the shared projects. Simply because there the way we have done business hasn't changed for 300 years or so. So there's piles of paper that really need physical stamps, physical signatures, and very often this pile of paper arrives later than the goods arrive per ship. So something really has to change there. And blockchain technology actually is a perfect way to do that, because if you have the immutability of the blockchain and you sort of upload the smart contracts on the blockchain, it's there without needing all these physical stamps and signatures. But you're totally right. Governance around this is a really important thing, because we can do it on a blockchain. Some of our pilots have actually been doing it completely on the blockchain, but local rule and regulation actually require still the documents. So we had the physical stream underneath it to actually show that it worked. And in one of the trades we did, which was for soy, so that's a food, The US Department of Agriculture was actually looking at a node with us to see what was happening so that they can get comfortable about this as well, which is what you will need. All the actors in an ecosystem have to start to trust this technology.
If we get back to this notion of trusting the technology and trusting that it can replace our current practices, I want to actually roll this back a little bit to the notion of how we actually build trust and how we establish trust within a network first and foremost. Because if we recreate or if we put in place a different infrastructure, a technology infrastructure that can substitute for this relationship trust that we've built over the course of centuries, can we actually adopt it? Can we actually benefit from it? And will it be something that will fundamentally replace what we've actually established as making that connection, building that trust? And Stephen, you've spent a number of years in that trust building role. How do you see the technology affecting the relationships between the parties that you have been facilitating business for?
Having an option of decentralizing information and having a decentralized governance around that, where you have open source creation, contribution from more than a sole organization or a sole individual, a need to have a source of information which is shared. That information needs to be relied upon, and I think this is part of the element which starts to build trust. So you need veracity of the data. And I think that's therefore a very good application of a distributed system.
Is this something that maybe actually fosters trust, that if it is decentralized, then there is a sense of legitimacy because it cannot be manipulated?
Transparency.
Transparency. And maybe that is what trust is.
Why?
Transparency facilitates.
Fintech has own huge sector in the financial industry. However, if you look to banking itself, the fundamental role of the bank is to provide bridge between short-term deposits and long-term loans, and to bring liquidity into economy. Unfortunately, fintech can't do it. And on the other hand, the situation with the regulator is to control, to monitor the level of risk and liquidity into economy. Otherwise, we will face with financial crisis. That's a general point. So when we're talking about collaboration between digitalization and the original banking industry, I think that in the future it would be based on the modern technologies. And for banks, digitalization means also huge challenge. We need to change our financial model, more client-oriented, based on modern fintech platforms.
Let's talk about how that may shift if we have a real-time responsive system. What then becomes the role of the central monetary authority in that particular jurisdiction for that market?
Yeah, so I do agree that fintechs and blockchain-based fintechs will grow in their ability to very efficiently allocate capital, allocate liquidity to longer-term investment purposes. So we're going to get there very quickly, I believe, and there are platforms already in place that do that. I think where the real value is in real-time monitoring of situations as we move all of the foundational elements of society, money, other kinds of assets, identity, reputation, legally enforceable agreements, government certificates, et cetera, as they all become natively digital. Every transaction involving those instruments will clear and settle in the instant of the transaction. You won't have reconciliation issues because it will all be on one shared ledger. And so in that sort of context, we've already built accounting systems that can give you an understanding of real-time flows and of where every asset is right at the moment. And so regulators who are measuring risk in the economy are usually working on 6-month-old signals or 3-month-old signals. And if you understand control theory, it's really dangerous to take old information and sort of move the lever based on that old information. That's how you get oscillating, increasingly large cycles.
What are some of the current business models that the banks are actually looking at in terms of that scalability and that evolution of value creation? What are some of the things we should be thinking about, and what are some of the protocols that will enable those new models? I know that you've mentioned identity. That is one of them. How are you thinking about identity in terms of the protocol and the value creation that can come out of that?
There's a couple of things you can think about, but it's also something that will be established over time. So at the moment, what we're doing with blockchain technology is indeed largely creating new infrastructure. And I think the trick really is to not rebuild the current complexity, but take it a step further and make it way more easy for people to interact with each other and do business. For instance, in trade, we can replace the documents with all kind of smart contracts and nodes on a blockchain, but ideally you create a different form of trust where people can connect with each other without having interacted before. So they don't know each other, they don't trust each other. They don't know whether if I pay, will you actually ship the goods? And if I ship the goods, will I get paid? And there's things that you can create on a blockchain without having this uncertainty around it. What you can envisage is that it will actually enable way more trade between people. It will give small and medium-sized enterprises the opportunity to deal with suppliers that they've never heard of before.
Well, if we also look at the cycle of technology and the timeline that we have been comfortable with since the establishment of banking with the Medicis, are we actually reading the tea leaves right in terms of how that cycle is being shortened? Or is there an actual danger of us missing that particular point where we have an opportunity to really be part of the development community that's going to standardize a decentralized technology and structure?
So the way these technologies evolve is basically through an S-curve where there's a slow development cycle and then it goes nonlinear. So if you lived through the 90s and the early aughts, essentially the internet was talked about a lot, and then suddenly it was everywhere. And so the inside view on our blockchain ecosystem is that there are literally thousands of projects. Many of them are on Ethereum itself. There are many other decentralized protocols. There are protocols for storage and for bandwidth and heavy compute and proof of location and many others. And there are standards being built. There are components being built. There's governance tools and accounting systems and fungible, non-fungible, many other kinds of tokens and atomic swap protocols and exchange systems and naming services, and all of these are getting mature.
Valerie, what's the piece of advice that you'd leave us with? That 5-year gap that you see, what should a central authority be thinking about and acting on in order to be prepared for this new decentralized world?
Well, I think that in general, in 5 years, the bank has changed completely the model and to focus to client needs, first of all, because we have lots of data about our clients. We can use this data and to provide lots of services and products. So we can be like Amazon for our clients.
In summary, there is a place, but it's about finding the actual value. It's about facilitating the actual collaboration, and collaboration is where you can start to explore the place. That at the end of the day, we want to serve customers, and we want to actually make the world work, and that can be done. But we're now facing a revolution in terms of the technology and the shift of the balance of power, especially now that we're living in a fundamentally rich data, digital-driven age. And society and technology actually mirror back to one another what is possible. So your place, where we belong, what this industry is going to eventually settle into, is finding that intersection of tension between the new technology and the social change and where we act as individuals and institutions and organizations. There is place, but apparently the timeline is shorter than we think. Join me in thanking each one of our panelists, Anna Reed, Joe, Stephen, Valerie. Thank you very much.